let's look at what is happening in terms of interest rate cycle in the US. So the Federal Reserve decided to maintain its benchmark interest rate after making 3 consecutive rate cuts in the last year. So this year, clearly, there is no change at all. So what happens in the US is, for example, in India, we look at inflation and we look at the liquidity, and based on that, we take the call. But when you look at Fed, they also look at unemployment as another parameters, and basis that they decide and take the stand. So they maintain the position of no changes. On the other side, what we are witnessing is the dollar index is inching up big time. And in the past, it was always observed that whenever there was a sudden spike in dollar index, we saw major outflow happening in the emerging markets.
Hello, my name is Vikas Agrawal and I am the founder of AIF and PMS Experts India. What we have observed is that there are more than 90% of the viewers in our YouTube channel who have watched our video and have been watching our video continuously at the regular intervals, but have not yet subscribed to our channel. So my submission to all of you is that please subscribe to our channel so that we can reach out to more individuals like you and spread the awareness about the whole investing game. Thank you so much.
Good evening, everyone. Welcome to our Market Outlook webinar. We are thrilled to have you with us today for an insightful session. I am Samir Kumar, Chief Business Officer at AIF PMS and Expert India Private Limited, and I will be your host for today's session. We are honored to have with us Mr. Vikas Agrawal, our founder and CEO of AIF PMS Expert India Private Limited, with 23 years of experience in the investment industry. Vikas has developed a deep understanding of market trend, portfolio management, and wealth strategies. He has been instrumental in helping investors navigate the complexities of financial universe. And today he will share his expert outlook on the market for 2025. विकास जी, मेरा आपसे एक अनुरोध है कि सेशन को आप मिक्स रखें, हिंदी और इंग्लिश, और इन्वेस्टर और जो भी लोग इसको ज्वाइन किए हैं, ये सेशन हमारा बहुत इंटरेक्टिव होने वाला है, तो आपके जो भी क्वेश्चंस Q&A हैं, आप प्लीज चैट बॉक्स पे पोस्ट करते जाइए. ओवर टू यू विकास जी.
Thank you Samir ji for helping us to organize this session. Well, we can see a lot of volatility in the markets, and markets have been in a doldrum, I would say. People are really concerned about, everybody wants to know what is going to happen, because every day when you see the market, it's going down, especially in the month of February. We see a lot of corrections happening. So what we'll do is, we are prepared, like every month, we share our house views on the markets. So we've done some homework. So if you allow me, I'll share the screen and share some of the data points which would help all our investors to navigate this market volatility. Welcome to the webinar. First of all, I would like to thank all the participants who have taken the time out from their busy schedule and listening to us. And also take this opportunity to thank all our viewers on the YouTube channel for giving us the patient hearing and appreciating all our efforts. So what we're going to do is, basically, let me just tell you that this is going to be our summary, the session, the agenda. Agenda is to give you perspective about US macros, what is happening in Indian economy, the macros and micros both. And then we'll come to equity markets, where we talk about fundamentals and also talk about behaviors. And we'll also try and look into the valuation indicators, what they have to say. We'll start with US. The Honorable President, Donald Trump has taken over. And after he has taken over, he started implementing the tariffs on various countries. So, when you look at the data, strategic tariffs, the 25% additional tariffs on import from Canada and Mexico. So these are the two countries which got affected the maximum. And on top of that, additional 10% on additional tariff on imports from China. So that clearly indicates that these countries got affected to a large extent. But let's look at the other side, that, what is the economic power, what is the kind of correlation these countries have with each other in terms of percentage. So when you look at the overall US, the GDP, the trade accounts for just 24%. So 76% is their in-house story. Whereas Canada, their GDP depends on trend, the trades, which is about 67%. And for Mexico, it is 73%. So literally, they are completely dependent on this trade. So they are also going to put these tariffs on US. So it's not one way or the other, but clearly this indicates that US may not have too much of impact if these countries are going to put back the tariffs on them. Whereas the China is about 37% of the overall GDP, the trade, which I said initially is the dependency on the trade. Then we'll talk about the impact of this. So there are some economists and Goldman Sachs, the global investment research, as per their paper, they say that the China, because of this 10% additional duty, the tariff, China's GDP may come down by another 0.5% because of their dependency on US economy. Likewise, it will have other effects also. Let's look at what is happening in terms of interest rate cycle in the US. So the Federal Reserve decided to maintain its benchmark interest rate after making 3 consecutive rate cuts in the last year. So this year, clearly, there is no change at all. So what happens in the US is, for example, in India, we look at inflation and we look at the liquidity, and based on that, we take the call. But when you look at Fed, they also look at unemployment as another parameters, and basis that they decide and take the stand. So they maintain the position of no changes. On the other side, what we are witnessing is the dollar index is inching up big time. And in the past, it was always observed that whenever there was a sudden spike in dollar index, we saw major outflow happening in the emerging markets. And this time is not different. So because US, the way they are imposing these tariffs on other countries, so US trade policies, including tariff on imports, have made foreign goods more expensive. Please understand that it is even more expensive. And this somewhere will reduce the demand for foreign currency. And therefore, US dollar is strengthening. This is settling at about 106 now, but it went up to 107.5 also. So clearly it suggests that the dollar is becoming even more powerful. And when we talk about the interest rate cycles, let's look at some of the countries like US. As I said, there are no changes even after Donald Trump taking over. China, again, no changes. In fact, Japan, after a long time, there we saw rather they had to increase their interest rate. When you look at the other part of the country, or I would say the rest of the world, all of them are in the verge of decreasing the interest rate. Clearly indicates that, when you look at data like UK, Eurozone, Canada, Germany, India has also reduced from 6.5 to 6.25% in the month of February. So there is a change in the interest rate movement. Now, another interesting data. Now, this is for the first time now, US, their debt surpasses by $36 trillion. So US एक ऐसी इकोनॉमी है जो जितनी बार उधारी लेती है, अगली बार उससे डबल आके उधारी लेती है. मेरा कहने का मतलब ये है कि you see, even during the previous presidency of Biden, we saw that the debt of US was at all-time high, and this is further increasing. So the total debt surpasses by $36 trillion, which is by far the highest across the globe. This is what some survey which indicates that some world predictions for 2025, what people were expecting. Some people were saying that we're going to see increase in the temperature because of the global meltdown happening. But then we did not see any major changes out there. Some people said that the prices will further increase faster than the incomes. There also we see a lot of neutral aspect, because when you looked at the previous data, you saw that interest rates, most of the countries are trying to reduce because inflation is under control. So that clearly indicates that prices have not really gone up to what extent what people were projecting. But this is another important statement, is that AI will replace many jobs in the country when this has already begun. AI is becoming more and more powerful, and many people live their lives in virtual worlds. This is not happening. People are traveling across the globe. There'll be a new global pandemic caused by new virus. So far, we've not heard anything about that. People in many countries will become more tolerant of each other. Well, this is not happening. They are mature enough to manage the situation. The war in Ukraine will end in 2025. Well, it was expected, but so the way the activities, again, the war situation. After seeing the situation, we do not see any major actions happening there. Investors have poured more money in the US equities after COVID, and they became more confident about US as an economy. And the household money of US is also gone to the extent of 58% in the US markets. So if US stock markets do not do well, which means that overall economy may not do well, because their exposure to equity in their equity market is at about 58%, which is highest across the globe. US has disproportionate shares in the global market cap. No denying on the fact that you have company like Apple, company like um, Google, and even the market cap. Yeah, you saw the market cap of the entire market, which is S&P 500, and also these companies. This clearly indicates that they have disproportionate. When you look at India, we have only 3.4% of the market share, even in terms of the market cap. Whereas, despite we are the fifth largest economy in the world. So clearly, US has disproportionate share in the global market cap. Let's look at some of the aspect of Indian macros. So from an India point of view, this time the budget which was prepared, it's like a Mahakumbh Triveni Sangam, where this government of India tried to focus on fiscal prudence and also looked at giving boost to the consumption and have a sort of a real balance between capital allocation. Now, if these three engines starts firing together, then you're going to see GDP bouncing back to the next level, and we're going to read that in 2000 in detail, each one of them. So basically, you have a situation where we are closer to 24,000 levels of Nifty. You have consumption story which is likely to pick up. The government of India is focusing on that. And then on the other side, you have geopolitical risk, which is increasing, and the earnings, which is likely to go up in the future. And you have Trump administration, where we want to see a lot of these duties and the tariff that they want to put. So 2025, a small snapshot about budgets. So the total receipt, other than the borrowing, and the total expenditure are expected to be at about 35 lakh crores and 50 lakh crores respectively. Well, by far this is not a small number. I remember, 7-8 years back, when we used to study these data points, we used to be almost 4 times lower than the current numbers, and this has gone to almost borrowing has gone up to 35 lakh crores, and the expenditure is about 50 lakh crores. The net tax receipts are estimated at about 28 lakh crores. The fiscal deficit is estimated to be 4.4% of the GDP. So this government says that we don't want to give too much or pass on too much of loans to the next generation, and therefore the fiscal deficit is likely to be maintained at 4.4%. If that is achieved, then I would say it's a remarkable achievement. The gross borrowing, market borrowings are estimated at about 14.82 lakh crores, And capex expenditure is about 11.21 lakh crores, and you have additional state level expenditure put together. It is coming to about 17 lakh crores, and your borrowing is about 14.82 lakh crores. It's almost 1:1, I would say. So they are basically borrowing the similar amount what they are spending. This government is clearly focused on agriculture, done a lot of activities in terms of increasing the productivity of the farmers, focusing more on pulses, the self-sufficiency, the improvement in the self-productivity. Focus on SMEs, they are the future of India, trying to give them support in terms of providing them credit, access, loans, startup facilities, etc. Focus on investment, so infrastructure development, your road connectivity, your other innovation labs, and they have also realized one thing, that there is a gap in terms of skill development, and therefore they want to focus on skill building this year as well. On the other side, clear focus is on export promotion, trade infrastructure, and boosting the FDI money. Historical GDP bifurcation. So this is very important aspect, that when we talk about this time, government of India has given boost to consumption, as in they want money to be given in the hand of people, and therefore they are not charging any tax on income up to 12 lakh rupees, and for salaried income, which is 12.75 lakhs rupees. What do you mean by that? Now, this is the GDP bifurcation. This number clearly indicates that in India, the total GDP, 58% of the GDP component comes from private consumption. And giving 1 lakh crore of the rebate on taxation, on income tax, direct taxes, this money will not go in roti, kapda, and makan, because they are middle class families, and that needs have been fulfilled to large extent. So this either would go towards expenditure, traveling, etc., because people fulfill their I would say desires eventually. They may postpone, but they do so. Or maybe some amount of money will come in the form of SIPs or investments in direct. So when you know that 58%, so this 58%, they wanted to fire this engine, because somewhere they witnessed that the consumption requires some amount of boost. And then they given this, I was talking about, it's called Triveni Sangam. On the other side, the government consumption is about 10%. And you know that the investment, the capex targets this government has taken is about 11 lakh and 31,000. Mota moti 1 lakh crore almost a month. And then you have your investment, which is about 35%. And import and export, you see, is going to be, they are nullifying each other, in the sense that in the 2022 and 3, you had 24% export and 24% import. Not to forget that India is the largest country to import oils, and therefore our import bill is always high. So the total number is about $1,300 billion, and out of which you have $850 billion of imports, and only $350 billion of exports. So this is balancing out each other. You see, rather it is giving us the discrepancies in maybe 1.5%. So this government wants to focus more on export and reduce the import. So as I said, that the no tax for individuals up to 12 lakhs. So this will add to the private consumption, that which contributes 50% in the economy. Boost to private sector consumption. With more money in hand, middle class will spend more money in consumption. And impact on GDP, which is private consumption, is expected to increase, further propelling GDP growth. And investment may also see a slight boost due to increased savings and spending. So this is what the government of India wants to achieve. And 2025 directly targets the middle class consumers, and therefore they've given this tax relief clearly to boost the private consumption. And this increase in consumption will contribute positively to overall GDP growth. So so consumption is also one of the key drivers. The other interesting data, a lot of people are concerned about share markets, their valuations, and but let me tell you, the trend is reversing here. This number clearly indicates, your GST collection after a long period of time. This month, in the month of January, it was recorded at the nominal GDP growth of the country is at 9.7%. And in January, we recorded the GST collection, which is 12%, 12.3%, which is higher than the nominal GDP growth. Otherwise, you see, even in the month of July, which is July and August, they were at neutral, I would say, because that point of time, your nominal GDP growth was at about 10%, which further came down to 9.7, whereas the GDP, the GST collection was at 1.95 lakh crores. It is a record high numbers. I remember this was a dream of our honorable finance minister when we had implemented the GST number, and total collection used to be below 1 lakh crore, and she had the dream of doubling up in 5 years time to 2 lakh crore. So almost mota moti we are there. So this clearly indicates that the economy activities has begun. On the other side, kudos to our central bank that inflation numbers have also been controlled to large extent. And what we saw in the last quarter, because of the food inflation, the number, the food inflation went up to 26%, came down to 11%, and your inflation rate came down to 4.31%. Now, the target for the RBI to keep the inflation is about 4%. So they are almost there where they want to be. 0.3% can be further reduced by inching up the liquidity in the market. So this is a great achievement that the inflation is in comfort zone now. And on the other side, the RBI has taken a couple of stands. One, you saw that the interest rate they have reduced by 0.25%, which is at 6.25% now. Repo rate reduction was lower down, repo rate by 25 beeps, as I said. And this clearly indicates that there is a reduction in the borrowing cost because of this. And the GDP forecast for RBI is to have 6.7% in 25-26, with an estimated growth of 6.4% in the current fiscal year, following an 8.2% increase from the previous year. And the inflation forecast is also at about 4.5%. So it is very much in line with each other, and the data clearly indicates that they are 97% closer to what they are anticipating.